Hey, what's going on? I'm Metta World Peace, former New York Knicks player, New York City legend, and you are watching Taking Stock.
2 minutes to go here into the close on the trading floor of the New York Stock Exchange. The major market indexes may be down, but I got to tell you, as of the last few minutes, the vibes are high. The USA women's hockey team officially securing the gold medal in overtime a few minutes ago, right in time before the closing bell against their main rival, Canada. Lots of cheers breaking out down here on the trading floor of the big board. As for the markets, most of the indexes will finish in negative territory. Not overwhelmingly so, but it does look like the small caps, the Russell 2000, will be the winner of the day, up about 0.2%. Utilities, energies, and industrials, those are your three strongest performing sectors in the S&P 500 for this Thursday. The laggards in the S&P include financials, discretionary, and tech. A little bit of that risk-off rotation to some more defensive names. Welcome to the show, one and all, on this gold medal edition of Taking Stock. I'm your host today, J.D. Durkin, mere moments away from the ringing of the iconic closing bell, which we do down here on the trading floor of the big board every single day. The great Michael Reinking, senior market strategist here at the NYSE, he's on deck. He'll join us right after the bell for his take on today's price action. Volatility inching up on the day, the VIX reclaiming a 20 handle, the dollar quietly strengthening for a fourth consecutive session here on Wall Street, while gold and silver, both precious and industrial metals, moving up into positive territory ever so slightly, and the crypto majors at this hour mixed. The team from Aris Mining, ticker symbol ARIS, here now to do the closing bell. And there you have it, my friends. With the strike of those three gavels, we officially bring about a close to the trading here on Wall Street. Your final tail of the tape, the S&P 500 down 0.3%, the Dow 30 down 0.5%, the NYSE Composite Index in negative territory, let's call it 0.1%, and the small caps, the big winner on the day, aside from USA women's hockey, of course, the small caps up 0.2, about 0.25%. All right, Michael Reinking, good friend of ours here on the show, senior market strategist here at the NYSE. What are you seeing across the indexes with a specific eye on volatility as of late, Michael?
Well, happy Thirsty Thursday, which is a little tease for some guests coming up later in the show for those of you in the entertainment industry.
Well done there, Michael.
But, look, it's been a festive close here. As we had markets close a little bit lower today, but with that gold medal win, the vibes have picked up a little bit. Today we did see we broke 2 consecutive weeks where the S&P 500 fell over 1% on a Thursday, so we kind of broke that streak today. But we have seen kind of volatility picking up kind of throughout this week, especially intraday, on an intraday basis. Right, part of that's related to the fact that we have options expiration tomorrow. Right, so with that options expiration, you'd expect to see volumes and volatility pick up, especially around the open and the close tomorrow morning, and into the close tomorrow. Right, and that's kind of driving some of that intraday volatility. And you have the VIX, which is hovering right around 20, as we have some of the geopolitical concerns, kind of bubbling back up.
Yeah, let me ask you about rotation a little bit more, broad rotation. I mean, on a day like today, it rotates into utilities, energy, industrials. We have the risk-off day whenever tech and discretionary are kind of the laggards on the S&P. What have you seen more broadly in terms of those risk-off rotation days when investors say, we take some profits off the top-heavy stuff and we're going to look for some other names to put our money to work?
So we've seen a pretty broad rotation throughout this year, right? And if you kind of take a look at it, this week has actually been a little bit of a counter-trend move, right? So last week was all about weakness in kind of the areas of the market that were being perceived to be disrupted by AI, right? And it was like that AI wrecking ball made its way throughout the market, software, financials, kind of into insurance companies. We're seeing some of those companies kind of start to bottom out, try to find a bid this week. Like it's a little bit like the outside, right? We had this AI winter last week. It's thawing outside. We're seeing a little bit of a thawing of that within the marketplace this week.
Yeah, but of course, we're only ever just one data point or one trading day away. We're rocked right back to reality on the AI trade, whether or not we want to the point of economic data. PCE inflation print tomorrow. I mean, this is the big one for the Fed. We say CPI is important, PPI is important, but if the Fed has a favorite one, a favorite child of the three inflation prints, it's the one we get tomorrow.
It is PCE is typically the important one. Now, that is a December reading, so it's a little bit dated this time around, right? So I think actually potentially the biggest catalyst tomorrow, outside of options expiration, is that we have the first opinion day from the Supreme Court after their recess is up. So we could potentially get kind of some headlines around tariffs in the morning. Those start to come out at around 10 o'clock, so everybody's going to be glued to their screens.
Yeah, of course, the latest on IEPA, of course, Emergency Economic Powers Act, out of the administration. Do the Supreme Court side with the Trump administration or against them? Big box retailers like Costco are involved in all that litigation. I got less than a minute left. Any other technical levels you're following? You finish the day at 68, 61, still waiting to bust out those S&P 7,000 hats.
Kind of really interesting. So if you look at where the S&P 500 has been, we've been in about a 200-point range pretty much since the start of this year. This week we've been ping-ponging back and forth between the 50 and the 100-day moving average. And on Monday morning, we tested the late January, early February lows at 67.80 in the S&P 500. So that's kind of the key level in the short term to kind of watch to see if we get any more downside. Clearly, 7,000 is the number to watch on the upside.
Yeah, we've got the hats ready.
Yeah.
They're in the boxes down here. We have to close. We can't just hit it intraday. We got to close at 7,000 to bust out the hats. The great Michael Reinking on this gold medal winning edition of the show. That was really exciting before the bell.
Thanks for having me.
All right, go USA. Michael Reinking. We'll talk to you again soon. All right, we'll bring you the latest top analyst calls that hit the tape this morning here on Wall Street. First up, Chewy getting an upgrade from analysts at Raymond James. Thank you, fellas. Getting that upgrade to outperform. Analysts at Raymond James say the online pet company is simply too attractive to ignore at these current levels, down 47% since June, but Chewy shares up about 5% here on Wall Street today. Next up, Carvana, still a buy at Bank of America. B of A, however, lowering its price target from 460 down to 400 on the stock, but says, hey, this company, Carvana, remains in growth mode, down about 10% on the day, trading right around 323. And finally, DoorDash, still a buy at Deutsche Bank. Pardon me, Sarah. Thank you. Those analysts say despite disappointing earnings, the margin picture for DoorDash for 2026 still remains pretty optimistic, all things considered, up 3% on the day, but down almost 40% from where we were in mid-October. We'll keep the analyst train rolling along with the team from Dell. How about performance up here today? Up about 2%. This company receiving a tactical outperform rating from Evercore ISI. Those analysts are bullish ahead of earnings next week. They did lower the price target on Dell down to 160 a share. Shares of Dell are down about 8% or so here in 2026. And how about this one over at Klarna? That is not a misprint on your screen. Very rarely will you look up and ever see a stock that fell 27% in a single day, but that's what happened, getting absolutely rocked despite a beat on revenue. It's really the forward-looking guidance for the buy now, pay later giant out of Sweden. That is falling far short of expectations. They did, of course, have their IPO down here at the New York Stock Exchange back in September. Right after the IPO, shares rocketed. They priced the stock at 40. It went as high as 57. To get from there to where it is now, it's a drop of about 75%. We'll see what Friday's tape brings for Klarna. All right, FinTech TV lead anchor, their very own Remy Blair, sat down with Paul Gruenweld of S&P Global Ratings to discuss the bull case for the 2026 U.S. economy. Take a look.
Welcome to FinTech TV. I'm Remy Blair. Yields are back, but so is the volatility. After decades of lower for longer, bond markets are recalibrating to a regime defined by geopolitical fragmentation as well as sticky terminal rates. Now, the question for this year, 2026, is no longer about the timing, but where the new neutral actually sits. Well, joining us to navigate this next era is Paul Gruenweld, who's the Global Chief Economist at S&P Global Ratings. Paul, great to have you here. Thank you so much for joining me. Well, you and Vanguard are having an event here at the New York Stock Exchange. So first and foremost, given all the volatility that we've seen so far in 2026, what is the outlook moving forward and what are you paying attention to?
Yeah, well, we spent the second half of last year upgrading our forecasts, right? We were all worried about the impact of the tariffs. They were not as bad as we thought. The labor market held together. And now we've got this investment boom for the data centers and AI. So we started the year in pretty good shape. The question is, we have a recovery that's pretty narrow. We've got one sector investing, one sector hiring, and the consumption's kind of skewed toward the high end. Is that all going to hang together, maybe with some tailwinds from easy financial conditions and low oil prices? But right now, we don't normally say this, but we've got a little bit of upside risk to our forecast, I think, for 2026.
Yeah, so tell me about this upside and where you see this coming from.
Yeah, well, I think the big prize is productivity around AI, and we economists have a sort of a data point from the 1980s. One of our Nobel laureates, Robert Solow, famously said that he could see computers everywhere in the economy except in the productivity data. So people are kind of applying that same framework to AI, but it looks like the last couple of quarters in the U.S. we're starting to see this unexpected and not fully identified source of growth. But if that's AI productivity coming through, that is happening faster and a little bit larger than a lot of people thought. So it's not time yet to sort of declare victory on this, but this is a potential windfall for earnings, for government tax revenue, for household income. So we'll have to see if that's the real deal, and then how big is it, and how is it going to play out this year.
Yeah, and speaking of which, of course, we are paying attention to economic data when it comes to the labor market as inflation, as well as policy coming out from the nation's capital. Now, when it comes to policy, there's still a lot of uncertainty in terms of implications for the US as well as for around the world. So how are you factoring this in?
Yeah, well, one of the surprises last year was the resilience. So, the labor market is held together. We're still, I would say, close to full employment in the US, 4.4-ish. Hiring has dropped, but firing has also dropped. So the churn is lower. But yeah, we're looking at geopolitics. We have a long list of risks that could knock our forecast to the downside. But markets have been resilient. Trade looks like it's being rewired in response to the tariffs. Some of the capital flows are getting rewired in response to the tariffs. So the downside hasn't been as bad as we thought. I mean, there could be more to come, but now we've got the balance with the AI story. So, it doesn't look like given everything we've gone through since the beginning of last year, doesn't look like a terrible year this year, to be honest.
Yeah, and you did touch on risks. So tell us what you're watching when it comes to risks and why it matters.
Yeah, well, I think the foundation of growth right now, as I mentioned, is pretty narrow. So if anything happens to a combination of labor demand, the AI story, or these benign financial conditions we have, that's probably going to lead to a down leg of growth and could lead us to lower our growth forecast. So that could be a surprise around AI or earnings. It could be, a bad print for the labor market, let's say, or it could be, something around, just volatility in the market, jump in yields or something like that. But as I said, those risks have been around for a while and they still seem to be holding together.
Yeah, and finally, when it comes to the outlook moving forward, of course, we're paying attention to policy, in particular monetary policy. But at a time when we're watching what the other global central banks are doing outside of the Federal Reserve and what this means for rate differentials as well as the currency markets, what are the implications here and what is your outlook for the Fed?
Well, the Fed, we think the neutral rate for the Fed is 3%, maybe a bit more. So they're about 50 basis points above neutral. But if you look at the economy and where we are on unemployment and growth, et cetera, it's not obvious the Fed is far away from where it should be. So we have the Fed on hold the first half of this year and 2 more cuts later in this year. Rest of the world looks like they're pretty much done. ECB, we think, is done. They're at 2, maybe 1 more from the Bank of Canada. The Reserve Bank of Australia actually raised rates this week. But I think this cutting cycle that we started in the middle of 2024 is largely done. So in terms of flows, with the U.S., if you've got relatively high rates and a good growth story, that's probably going to support the currency.
Well, Paul, great talking to you as we
Likewise.
kick off 2026. Thank you so much for sharing your
My
insights.
pleasure.
Welcome back to the broadcast. You are watching Taking Stock live from the iconic trading floor of the New York Stock Exchange. And speaking of iconic, look who I got here, the great John Taffer, is executive producer and host of the one and only Bar Rescue. What a pleasure to have you here. Welcome back to the New York Stock Exchange.
Great to be here, JD. It's always so exciting to be here.
If you mind, I'm going to ask if you use the mic, if you don't mind.
Very exciting. I always love being here.
Of course, and you're always welcome back, and it's nice to see you again. So this is amazing. The show's been on for more than 10 years, but it's season 10.
Yeah.
Talk to me about some of the ways the hospitality industry has changed since your very first pilot episode of the show.
Well, in the stock market, I just want to talk about business for a moment.
Yeah,
for
please.
many years, restaurant chains were rated on growth. How many stores can you add? How many stores can you add? Well, now we're focused on earnings. So when the focus was growth, they opened a lot of marginal stores, a lot of stores that maybe shouldn't have been open because the market was demanding growth. Now the marketplace is demanding earnings, and there's a lot of marginal stores out there from that spurt of growth. So there's a compression happening in the industry. We're starting to see companies pulling back, closing units. Even successful operators are starting to close some units now. But I think post-pandemic, it's a different world. I think consumer habits have changed, consumption has changed. I think GLP medications have impacted the industry as well. People aren't eating as much and they're going out and these more. And then of course, the male labor force gets less and less every year. So that's impacting us with regard to labor. So we've got a number of issues that we're fighting to get past right now. Controlling inflation, no tax on overtime, no tax on tips. These are little things that are helping us, and some of the regulatory cutbacks are helping us as well. But we've had a difficult few years for sure.
That's a fascinating note on GLP-1s. Had not even thought. I mean, it's a topic of top conversation for so many publicly traded companies, not just in the food and beverage space, but we hear it from the major airlines as well. What else is on your radar for that particular story? It's an important one right now.
It is important. So people, of course, are looking for value propositions in restaurants today, and the GLP-1 medications might be the way to get there. So, for example, we're assessing now smaller portions because we're finding GLP-1 users are throwing away half the food. So why not reduce the portion, reduce the price a little bit, maintain your same operating margins on a percentage basis, but provide a better value proposition to those that are eating less. So some operators see this as a problem. I see it as a potential opportunity.
What advice would you give to any entrepreneur or investor who is seeking to enter the high-volume food and beverage space in 2026?
You know, I find that bars and restaurants don't fail. They run out of money. So the trick to opening a bar and a restaurant today is have extra dollars. I find so many operators that ran out of money in 90 days and they were so close to profitability. Had they had enough money for another 60 days, they would have made it. So if you don't have a thick experience book, have a thicker checkbook and make sure you have the dollars to weather those mistakes in the beginning until you get good at it.
I got a few rapid-fire questions for you, if you don't mind. In your personal opinion, what is the worst drink to order at a bar?
Oh my God, the worst drink to order in a bar is probably something like a Mai Tai, because it's never going to be the same twice.
Do you have a favorite bar here in New York City?
Probably employees only.
Oh, boy. Okay, very nice. What is worse, in your opinion, a dirty bar or a boring bar?
A boring bar. I mean, if the bar is exciting, you can get past the dirt.
Fair enough. The best game or activity that a bar can have for bar patrons?
Oh, I think pool. And I would say billiards because it's a 20-minute game and you can have a couple of drinks in one game.
There you go. I like that answer. If you could ban one thing from bars forever, what would it be?
Well, smoking, but we've already banned that. I'd love to ban cell phones from bars because the whole point of a bar is interactive. I'm supposed to be looking at you, not my phone all night long.
That's a really good one. I hope to have a drink with you sometime. John Taffer, host and executive producer of the one and only Bar Rescue. What an honor it is to have you on the show. Please come back and see us anytime.
Good to see you, JD.
Great to see you. Folks, don't go anywhere. Much more Taking Stock coming up right after this. Quick break. Welcome back to the show. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Our next guest joins us now, fresh off of the closing bell podium. This is Neil Woodyer. He is Aris Mining Corporation's chairman and CEO. Neil, great to have you down here at the big board, and thanks for joining us here on the show today.
Thank you very much for being here. Very good.
Of course. So you find and mine gold, mostly gold, but silver and copper as well, and run gold mines in parts of South America. What is something about gold mining operations that you think most investors misunderstand?
Oh, I think they misunderstand the environmental element. If you do it well, you can also mine, get the gold that people need and the country needs, and at the same time do it in an environmentally friendly way, if you do it in the right way.
I know many of your operations are down in the country of Colombia. Talk to us a little bit more about that global footprint that is so important to your operations that some of our viewers might be interested in learning more about.
Well, Colombia is actually rich in gold, but it's 85% of the Colombian gold is from informal, illegal miners, not commercial miners like ourselves. So we've been working with these small groups, and some of them we've been mining in the area for 450 years near our mine. And we start formalising and working with them as partners. It has a tremendous effect on our economics. It also has a tremendous effect on the social community. It's a good way to do it.
How do you go about establishing those relationships if the pure resources have been there for quite so long, and you try and come in and establish those relationships? For instance, down in Marmato, Colombia, not too far from Medellin, that's one of your central locations of operation.
Yeah. Well, as I say, they've been mining there for 450 years, but they mine in a different way. We come in with machines, we come in with equipment, we come in with much more technical knowledge than they do. If we can add our skills to their skills and work together, we also bring capital, and they're short of capital, so we can work together. They get about 45% of the gold out of the rocks when they process them. We get 95, so there's a bigger economic pie to share together, and that's how we've been successful in that model.
Neil, I want to ask you about uplisting. You've been an NYSE American company. Now you're right here at the proper New York Stock Exchange, ticker symbol ARIS. A great day for the stock, by the way, up 3.5%.
Yes.
What does the uplisting mean to you and the company?
Oh, it means much better communication with shareholders. It means improved liquidity, which will attract the larger shareholders in towards us. And it establishes us as a larger company, more attractive investment. And we've been done very well over the last 2 years when we originally went on the exchange. So we're very proud of what we're doing.
All right. Well, congratulations on all of the success. Thank you for taking the time to join us here on Taking Stock. And please come see us at the big board anytime. It's great to have you.
Excellent. Thank you very much.
Neil Woodyer, Aris Mining Corporation Chairman and CEO. Don't go anywhere. Much more Taking Stock, including the latest from Scarlett Sieber at Money 2020, coming up right after this. Tina Loncara joins us now for a one-on-one interview. Tina, of course, is the global head of public relation at Money 2020. Tina, thanks a lot for taking the time. It's great to have you, and I've been so excited about our conversation today. Money 2020 Asia happens in Bangkok in April 21st to April 23rd. Talk to me first and foremost about some of the ways participating companies can prepare for their news stories ahead of the show in April.
Sure. Thank you for having me, JD, on the show. So yes, we are super excited about Money 2020 Asia in Bangkok. And we are now in the midst of booking speakers and planning out these fantastic news stories that we love for the companies to submit. So if you are a delegate, if you are a sponsor, if you're an exhibitor, you have the chance to submit to our call for breaking news for the chance to present your news story on stage in front of the global media audience in Bangkok.
So what exactly is Money 2020's Asia's call for breaking news? And talk to me a bit more about the things you're looking for.
Money 2020's call for breaking news in Bangkok is essentially all about finding those amazing news stories. Whether you're a delegate, whether you're a sponsor, whether you're an exhibitor, you have the chance to submit that exclusive news story to our call for breaking news submission on our website. We are looking for anything between product launches, mergers, partnerships, acquisitions, white paper surveys, reports. Media tends to love white papers and surveys. What is the most important thing here is that the story has not been launched anywhere before. It needs to be 100% exclusive so that the media really feels that this is a one-of-a-kind news story only launched at Money 2020 Asia.
Tina, I wonder, are there any special rules, special requirements when applying for call for breaking news?
Yes. So again, the importance of 100% under embargo, 100% exclusive, that is the number one rule. If you are announcing a partnership, for example, we would love to see that partner together with you presenting on stage. We cannot bring forward a partnership or a customer story unless we have that customer or partner on stage. Those are important things. What is also important is to bring forward your most senior executive or leader that has been part of making that news story happen. That is one important aspect of this. But we can't wait to receive your submissions, and we really have an amazing opportunity for a company to present that story on one of our 4 beautiful stages in Bangkok.
And if a company's news story is chosen, Tina, how can that company better amplify that story to the media at the show in Bangkok?
So we will promote the story ahead of time. We will promote the companies that are launching the story. The story will be exclusive up until launched on stage. The company can obviously promote this after they have announced it on stage. There is interview opportunities with the media afterwards. So this is a way to take one story to a global audience.
Tina Loncara is the global head of public relation, Money 2020. We cannot wait for the show. Thank you so much for taking the time to lay out everything that's at stake here for these call for breaking news stories. And thanks a lot for being here, Tina. We'll see you at the show.
Thanks so much, JD.
All right, welcome back to the broadcast. Tomorrow here on Wall Street, we will get the fourth quarter final GDP print. We'll get the latest numbers for PCE inflation. But as Michael Reinking mentioned earlier in the show, that comes from the month of December, so a bit of a lag. We get the S&P Flash Services and Manufacturing PMI data. And in the morning, fourth quarter results from the team at Western Union. Your final tail of the tape on this Thursday, Verizon, Chevron, and Cisco. Those are your 3 strongest performing names in the Dow Jones Industrial Average. And your Dow laggards today, including Goldman Sachs, Sherwin-Williams, and IBM. Your 3 best performing sectors on this Thursday for the S&P 500, utilities, energy, and industrials. Your laggards, financials, discretionary tech. Thanks for watching. We'll see you again tomorrow.